Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Wednesday, October 27th. So we will get to the recap of this afternoon. Pretty much straight up risk off. A lot of things were kind of indicating that today, not just the move in equities. So if you do look at some of these things like what bonds were doing, what the VIX was doing, what cryptos, I know a lot of people looking at cryptos, but what the cryptos were doing for the most part, and then even copper and oil. So we'll get to all that. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. This video is for education purposes only. You could read the full risk disclaimer here, and if the video is a little bit blurry, it's just because YouTube takes a while to render these videos. So yeah, let me get into some of this. Before we even get into equities, which don't worry, we will. But yeah, just odd move going on in bonds. Not really a lot of explanation for this today. We did hear that the Bank of Canada raised or are going to be raising interest rates and ending their stimulus. So I'm not sure if it's really kind of a move off of that or just overall indicating risk off. And it might be something as simple as that. Something that's just the market, doesn't like, and people are moving into bonds for whatever reason. Maybe they're expecting some volatility coming. So you just kind of have to take some of these things for face value and just realize that normally a move that sharp in bonds isn't the best indicator. All right, and then couple it with some other things. Now again, if you look at this, this is not like one day doesn't make a trend, and we're not screaming higher in bonds. We're just moving back to kind of a little bit of a reversion to the mean right now. All right, so then when we move over to copper, copper was down 2.3%. Again, it's not necessarily breaking down. It's actually just coming into support here, gave back this move. So you could call this a false, not a false, I wouldn't say a false move, but it retested the highs and failed to break higher there. All right, and then if you want to look at oil too, so I do view these things like together. If it's just one of these, maybe there's something going on with OPEC or oil inventories, but when you kind of have all of these things together, indicating risk off, it does paint a picture for you, right? And then finally, I do view Bitcoin when I see it go up, kind of a more of a risk on gauge, right? There's more speculative money into the market. When I see it go down like this 5%, I view it as the opposite. Right. So again, it's kind of I think smart to look at these things in conjunction with another. But overall, today was a pretty confusing day. Why was it so confusing? Well, because if you look at the Qs, the Qs were up on the day, right? But it's basically a couple companies that are responsible for the move. Some just really awesome earnings that we got from Microsoft and Google. Kind of delayed reactions to both of those reports yesterday. Particularly Google, of course they were talking about the negative in Google, but the overall numbers just very, very strong. So Microsoft, it's a big move for Microsoft, up 4%. If you look at Microsoft, the historical earnings that you see in Microsoft, right, 4%, you could see that's the biggest move that it's seen. It did see a couple down quarters back in 2020, but you could see, just if you go back, it's just not a name that moves much more than 3 or 4%. Google too, Google was up 5%, and that's a decent move for Google given the market cap, right? We haven't seen that, and well, there was one quarter back here, 2021, but you have to keep in mind 9% up 8%. This is when the company was a bit smaller too, hadn't rallied as much. So, you look at this, talking about painting pictures, right? Somebody told you, hey, Google and Microsoft did this today. You must have thought the market, had an awesome day and things were all rosy. But you look on the left of your bottom left of your screen, and our breadth indicator was showing otherwise. Right. So when we look at the advancers and decliners, right, you could see that there was 24 decliners and six, excuse me, only 6 advancers in the Dow. So yes, choke on that. S&P, sorry. So it's been a long day, so it's good to kind of, you got to joke around a little bit, even though if you've had a bad day. S&P had 423 declining names, 81 only 81 advancing names, and Nasdaq 2163 and 728 declining. So that gives you more of a picture, I think, than looking at those two stocks. And again, that's what's a little bit misleading is some of the names, if you want to throw in an Enphase Energy too, which is a solar name, was had a great move. So that's kind of how earnings are tricky, right? You're going to see some names do this, and you're going to see some other names get walloped, right? I see a bunch of names getting walloped in the aftermarket today. Another one too, Spotify had a real nice day, right? And that gets you back above the 200-day moving average. So, one of the things that I've been saying is going into earnings is to kind of, be objective. Watch some of these names that do have some really good price reactions because they might be your leaders for the next quarter. So we'll just have to see how this plays out. But yeah, if you look at some names here after hours, like, I didn't play ServiceNow because I just thought it was up too much. This is a name that I like to play because of the earnings history. But I said this market's just too a little bit too volatile today to put on. I tend to not really put on big earnings trades in general, but especially when the market is volatile. But you could see this is a number that has had very consistent earnings price beat, and it reminds me of this quarter back here where the stock fell. And then just kind of kept on going. I'm not saying that's going to happen, but you could see this price action. Wow, it did come back a little bit, but we've taken out the Market Webs indicator really helps on for names that report post earnings reactions. But ServiceNow did take out this 635-ish VPOC 636 and is bouncing a little bit. But this might be a buy the dip opportunity. It's just a little bit scary, spooky right now because of what we're seeing in terms of the volatility. Lending Corp was another one too that got absolutely smoked today, down 9%, only to rally back some here in the aftermarket. Notice that it took out that 1 hour VPOC at 31 and then bounced a bit. So I didn't really talk too much about the indices. You look at the indices and it's really not that big of a move, even though some things just got beat up pretty decently under the hood. And again, this is market cap weighted. The S&P, the Qs, they're market cap weighted. So things like Microsoft and Google, the bigger the company is, the more it's going to have an effect on the index. So what we can do is we could look at some equally weighted indices. So for example, let's just look at the RSP for example. This was down 1.3%. But does this chart look horrible here? Does it look like we have a breakdown? Are things breaking? Is this index that is equally weighted? So same thing, same companies that are in the SPY or in S&P 500, but instead of market cap weighting them, it is equally weighted. Okay, so every name gets the same index, but just different weighting scheme, and every name gets the same thing. Some people call that an unweighted index as well, right? So this to me is not bad. We're checking back to the top of value, right? If you watched yesterday's video or a couple of videos this week, if we definitely talked about this in the macro video on Sunday, that it was one of the scenarios that you could see a check back to the top of value, right? You got that check back now, right? And I thought that was definitely in the cards this week. Again, I wasn't making a prediction. I wasn't saying that was going to happen. I just said it's a scenario that seemed, reasonable to happen. All right. So let's go back to the S&P chart. So again, ugly. Candle yesterday, we talked about that, and a move down 40 basis points, but we haven't lost the short-term trend. Okay. Nasdaq, we talked about this in yesterday's video that we hit this 15,717 and got rejected. Well, we got rejected again today. Is it the end of the world? No, it's not the end of the world because we're not losing like the 5-period moving average or anything like that. But it's frustrating, right? It's frustrating price action. when you see something like this. The one that is equal, there is an equally weighted Qs ETF, right? So again, market cap weighted is QQQ, right? If you want to take the same names that are in the Qs and equally weight them so that you're not getting the same, so Microsoft and Google aren't distorting the overall movement today. You could see what the picture of this is. This also got rejected, and this, you could see the difference when you take the same names and equally weight them versus market cap weighted. This index or ETF was down about 1.1% versus the Qs, which were up on the day, 20 basis points. All right, and here's, the other one that just looks really tough is is this IWM, right? Talk about frustration station. Again, just leaning one way and then coming right back in. So this to me just is also symbolic of what this market has been from time to time. Is really difficult if you're chasing, right? So if you're sitting back buying things as they check back into support, you're probably doing a little bit better than waiting for a breakout, getting a little bit of a breakout, and then things failing, right? Again, it depends on the week, right? Sometimes that's been a good strategy, waiting for a signal. Other times it's just better. It's been better to really buy that dip. In my opinion, as long as it's into support, like the top of value, bottom of value, or like something like the 20-day moving average or the 50-day moving average, right? Not just going out there and buying any dip, right? Disciplined and having a level to trade against. All right, I've been touting the mid caps lately, but those also are checking back. So this is also at an interesting level. So before we talk about any more individual stocks, let me give you a quick overall bigger picture thoughts on today. Well, we've heard a lot about seasonality, about how once you got through September and half of October, the seasonality improves. That is correct, and in my opinion, seasonality is just one piece of the puzzle, right? I don't want to make all my decisions based on just seasonality. But the other thing is too, it's not just a straight line higher, right? We've also seen that these end of months, it's something that I talk about in many of these videos, end of day videos, is how difficult the end of the month has been in not every month this year, but many of them, right? And we've done that scenario multiple times. If you're a regular viewer of my videos, just look at the last, just look at the last week of every month in 2021, and it has been drastically different than what we've seen in the beginning of the month. We also know that third week has been difficult, right, of the month, over every month this year. Again, not every single month, but right around that monthly option expiration, that week has been difficult. So it's been like the third and the fifth weeks of months have been difficult on average, and then the beginning of the month has been just much better, right? And again, it could be just what some of these institutions are doing. They're putting new money to work in the beginning of the month, and then selling at the end of the month for whatever reason. I don't have an explanation for that, why they're doing that, but it's the pattern that we've been dealing with, right? I've also talked about how bad the last trading day of the month has been in 2021, and I'll put those stats on Twitter. But they've been horrible. The last trading day of the month versus the first trading day of the month. I think it's like something. I don't have the numbers in front of me, but I think it's something like plus about like 70 basis points on average this year, first trading day of the month, versus about the opposite. Down about 0.5% or so. So I will put that note out on Twitter with the exact numbers. But yeah, so keep that in mind for Friday. And bottom line is, when you are aware of some of these things, right, it can kind of help put things in perspective, right? Because you look at some of these moves that are happening, and you could get quite discouraged by a couple days of price action when you're not putting things in the overall perspective of what we've been dealing with, right? Markets going straight up week after week after week is not the norm. We are supposed to get check backs, right? And especially in uptrends, right? Notice how this chart in the S&P has been going. Besides this, obviously this was a little bit of a bigger correction, but something that we saw, very similarly last year too, right? This was last September and October, but we check back, right? We move up and we check back. We move up and we check back. So, yes, it is concerning that breadth has started to, looked as bad as it did today. It was also not a good breadth day yesterday. So those are things that we're going to have to keep an eye on, and I will certainly change my viewpoint as things, if we further see further deterioration than just a couple days of a move back from the highs. Okay, and clearly the small caps are really frustrating. But so that's it. In terms of names, I always like to give some show what I did for the day, which was not great by any means. But you could see, I didn't trade much today, and you could see, basically from the first hour, I just kind of stopped because I didn't like what I was seeing, and I was even looking for things, because I normally just go through scanners and look for things as we get closer to the end of the day. And, nothing was jumping out at me in terms of saying, hey, I got to go in and this looks great to buy the dip in, right? I'm more worried about things going down a little bit further. And some of the things that I really liked, I just put on this trade in Alcoa, and it gapped down today. So that's frustrating, because when you have a stop price and you gap down through it, I like to give things a little bit of a chance, but I got no choice, right? I got to honor my stop price that I set up for this thing, and that's a break below the 50-day moving average. So, we can't control these, and if we see more things like this, right, where we pull back into support, and instead of it holding, it's breaking down, that tells me to trade less, right? Now, again, this is just one name, but it's important to kind of put this in the overall framework and say, are you seeing this in a lot of situations where you put on a position, right? I bought the dip, right? And we got a further dip, right? And like I said, I didn't like what was going on in some of the strongest areas of the market today, which have been, some of the commodity plays and energy plays and banks, as well as, of course, the software names and tech and select growth. All right. A couple other things too. Goldman, I just decided to take this off because I was watching the move in bonds for now the third or fourth day in a row. And we know that there isn't exactly a one-for-one relationship, right? Sometimes people people love when they can hang their hat on a relationship, when they could say, oh, TLT is doing this today, so that means banks should do this, right? Well, sometimes that relationship works, sometimes it doesn't, right? On average, you got to look at sometimes more than one day. But sometimes people will be like, oh, I don't get it. Why are banks up today and yields are down, right? Because there is that usual relationship. But again, these things don't have to be an exact relationship every single day. Over time, yes, right. But in any event, there's just I do want to be on the right side of that relationship. So I was in Goldman, unfortunately, playing for a breakout, and I'll revisit this. This is one of those names that I come back to. All right, so that one, I did buy the dip a little bit in INMD. It didn't work. I'm still holding on to this because, even though it was down 5%, it hasn't broken any support. It's just a frustrating day for now, and I'll have to be mindful if it does. And then I did a little bit of substitution. SIBO was a trade I got into earlier in the week. Luckily, I got out of this for profits because they report tomorrow, and I don't want to hold the name through earnings. And I did move into this NASDAQ, right, which has been holding up, or which has been performing pretty well as all of the exchange stocks right now. All right, and that's stopped out of a trade from yesterday. Again, frustration city. I entered, in the beginning of the day, some U. I should have maybe taken this thing off at the end of the day, but I didn't. Giving this a little bit more time. It also can go down to the 20-day moving average here for support. Might be something that I would want to add to. We'll see. All right, a couple other things that I think will be interesting for tomorrow, because we got another big day of earnings tomorrow. Apple reports tomorrow, right? So I think the expectations for some of these names are not that high, but they still have to deliver, right? So, for example, here's the earnings history for Apple. So I'm always looking in this column to the right, right? This stuff is all interesting and fun to talk about at cocktail parties. How much the company made, what the percentage of sales were, and so on and so forth. But really, the bottom line is the price reaction, right? It's going to be whether the institutions are liking it and accumulating, or if they're getting out of their position, right? So the last 4 quarters, right, we have not seen Apple move up. So I generally look for names that are consistent, but it looks like something has changed here. We actually haven't seen Apple go up for more than a year on earnings. So we'll see how it shakes out for tomorrow. So again, not the best earnings history, but do I think that they tank on earnings? I don't think so. I don't think people are just because the country is reopening and you could travel, I don't think people are throwing away their cell phones. so sorry, a little sarcasm from me. Amazon is another one that's going to be kind of important because it's such a big weight in the indices. But you could see Amazon is horrific earnings reactions in the last 10 quarters, right? Why do I say horrific? Well, when you look at the last 10 quarters, they've gone down 7 out of the last 10. Okay, so we'll have to see. And I would love it if Amazon decides to crush it for earnings and ends up being a stock to trade this quarter. But I'm going to wait for the earnings for this one. Right, here's the chart of Amazon, and we'll just see what they bring. And I will probably put on a trade similar to what I did for Google. I'll probably have just a trade to participate, right? So here was my trade just to participate, right? I called this somewhere. Yeah, participation earnings trade, right? Again, I don't risk much for earnings, but I like to have something on just so that I'm a part of it, and that worked very well for Google. Did I hold it? Did I know it was going to go nuts today? No, because clearly I took profits at $6 and paid $3.45 for that trade. All right, guys, that's it. Again, bottom line is. Take it one day by day, especially, as we get closer to the end of the month, which every month I say this, that I don't like these end of months in terms of the price action. But what happens once you get through this week, you're on to a new month, right? And seasonality is strong, right? So were we due for a pullback into some support? I think so. But it's just a little bit difficult when you're dealing with so many names that were kind of acting well last week, and a lot of reversals and a lot of heavy moves down. So continue to honor the stops and trade less while the market is sorting itself out here a little bit. Have a great night, everybody. See you tomorrow.